All right, 3 minutes. High volume areas usually generates rotation. It's important to know when price comes to a high volume area, and just look at what we have this morning. Here's our VPOC, which is high volume area. What are we getting? Rotation, down, up, down. We're getting rotation around VPOC. And that's because this market is, in the pre-market, we had the buyers step in. We also had sellers step in. So it is beginning to settle, except right around this price. And once again, because it's sitting on a fairly significant longer-term low volume area, or it's relatively close, all of this again is suggesting a fairly volatile open. Okay, act as a price magnet inside price distribution curve. So when you have a fairly orderly, and this will come into play in August on the ES, when you have a fairly orderly distribution, your volume profile gives you a really nice bell-shaped curve, and the ES is trading within 5 points. You want to look at taking shorts from the top and longs from the bottom. In fact, sometimes in August, especially the last couple of weeks of August, those are the best trades. They're difficult to trade sometimes because they're a small range, but you need to understand that when you get a really nice distribution, you got a bell-shaped curve, you're getting weakness at the offer at the top, weakness at the bid at the bottom. Your best trades, when the profile is that perfect, is going to be short at the top and long at the bottom of that range. All right, all right, we're just a couple of minutes away here. I'm gonna come back to this. Can everybody see this chart okay? So this is what I do, and you can do whatever you like. Whatever colors make sense to you is something that you should do. So one of the things that I do prior to the open is I get my lines set. So all I have to do is pretty much put them into place. If there's a key level, like 1909 is a overnight low volume area, I mark that. And 0675 is a longer-term low volume area. And we're going to get an open here. We have our open. The open is at 1905.50. So I'm going to pull this down to 1905.50. And what I'm going to start watching for is the initial swings. So I have a potential opening swing high here at 1906.50. I really want to see this pull back down through the open for me to mark that. Now, if I didn't have VPOC sitting 3 ticks under this level, this might be a possible short or long for me. All right. So that is my opening swing high at 1907.75. So first push, we've kind of moved back down below that this bar. So that's the opening swing high at 1907.75. Right now, we've gone one tick. The downside has gone one tick beyond the open, below the open. So this is where somebody asked me yesterday, could it be that the one side or the other opening swing or closing swing would never be more than the open? And this is an example. So if we see the price push back above the opening swing, because opening swing low would never be right here. Opening swing low could never be above the open. It can be at the open or below it, but never above it. So as I look at the context, and all I'm doing is looking at this, not even the print, as I look at the context, this starts giving me some information. Now, when I look at the print, however, let's do this. I took an oil trade this morning, which is where this came from. When I look at the print, and I see price moving higher, still looks like it needs to go a little bit. What I see is the sellers right now have stepped away. They literally just said, okay, we're done. And they've stopped participating. So from an opening swing standpoint, because it can be a little subjective. Right now, according to at least price movement, buyers. I don't want to say buyers are in control. I don't like that because for me that just gives me a certain sense of bias. The way I put it for myself is right now buyers are being more aggressive than sellers, or the activity at the offer is more aggressive than the activity at the bid. And from a profile standpoint, find that profile. I have a session that that just marks the. Here it is. Looking for the profile. Right now, this is not. I got to fix this. It's not drawing the profile for me on my RTH chart. So anyway, this becomes the open swing. I want to get back to the information. This becomes the open swing. If I were looking at the print, this would be a potential level. It helps if I actually go to the end. And this is, we're going to do this again on Thursday and Friday, but here's the level I'm looking at a potential, sorry. Sorry about that. Looking for a potential short where I'd be looking for sellers to step in. I'm going to grab a drink of water. I'll be right there. Sorry about that. I'd be looking for potential sellers to start stepping back in. And while we've got weakness at the offer up here at this level, remember this is the overnight low volume area. Still seeing some strength at the bid here. A little bit at the offer at 1734. Starting to see some strength come back into the bid. So this would be a scenario where if This trade would be higher risk right now and for a short because of the additional strength at the offer here. And this is what I mean by potential volatility here. See if this pops back down. Anyway, that is the opening swing, and there are times the first pass through opening swing high, we may see it move all the way down to opening swing low, and even pass through opening swing low, and then pop back up. But a high percentage of the time, the second time price comes up through opening swing high, or the second times it moves down through opening swing low, that level, that opening swing high level, becomes a very good level to trade against in this continuation, this direction. So this would be long. Second time it came up, you look for a retest and then go long. First, for sure, the second time down below opening swing low. This is typically how I trade. Price will come down a second time, come back up to opening swing low. I would go short here, especially if the print warranted it, and I would put my stop behind the open. So 2-tick stop, potential for much lower price. So that's how we mark the opening swing. I will keep this opening swing low now, 1905.25. The sellers have tried twice. This is a push, this is a push, and they are nowhere to be seen. And so I am leaving my opening swing low at 1905.25. I do not use a geometric. Question is, do I use a geometric pattern to confirm in any way the setups? I do not. Yep, I do not. And yes, this is an open drive. An open drive, we talked a little bit about that the first day. Open drive is an open type. And right now it is an open drive, and that's pretty much marked by the activity. The open type is marked by the activity from the open. So if we had trade to the upside of the open, trade to the downside of the open, that's called an open auction. Whenever there is trading on both sides of the auction, meaning price is moving up above it, down below it, that's called an open auction. It typically means that there's neutrality, not conviction in one side or the other. There's relative neutrality, and you want to wait for the auction to move. You see prices just move back down to our opening swing high. With a little bit of a bounce. And again, the way you would do this is there's the print. We're getting weakness right at that level. Buying coming back, you'd be long, right? Long. Got the setup, and now you're looking for. I'd be looking for at least 09.75. If I started getting any significant strength back to the bid at 08 or 07.75, I would likely just move out of the trade. Again, I still have a sense this morning that there'll be some volatility. So I am, even though we have an open drive, this could just set up to be an open test drive. And I typically want to wait to see what this market is going to settle on. All right, my volume profile. This is another chart. This will be made available today, this template. All of these profiles that I have, I use only the RTH session. So we can see in this session right now, VPOC is at 1909. VPOC right now is, if you remember, the low volume area from this morning was at 1909 exactly. We are above yesterday's low. And when we start considering yesterday's, let me bring it up. We start considering yesterday's profile. Bring this over. You See this distribution, this lower distribution from yesterday? This is yesterday's, this is the overnight. Just do this. This is the overnight profile. You can see the low volume area right here. And then we're starting a new profile. And you can see right now VPOC is sitting right on top of this low volume area, filling in relatively nicely. And this is another instance where the profile does not look finished to the upside. I will tell you that 1250 is the closing swing low. 1250 right here is the closing swing low from last night. It's also a little bit of a low volume area in the overnight. We're getting an initial bounce, but you can see volume growing right here. This is not finished to the upside. I would expect, and when I look at the print, everything in this says that there's more room to the upside. Everything in this says that there's more room to the upside. Now, it may be one tick, it may be 10 points, but everything is saying that the upside is not finished. So this chart gives me the RTH session only profiles. And I will have that template made available today. So in the RTH session, I can see a low volume area established here. I can see one established right here at 1075. So if I were looking for a long, right, I was looking maybe to scalp this morning and looking for a long, this low volume area here, I would be looking for the print specifically to get weak at the bid and strength at the offer. And I would look for a long right off of this area, 1075. And when we look over at the print, there's 1075. We have weakness at the bid, strength at the offer. There's the long. And now I'm looking for, if I'm looking for a target above, I'm going to start looking. Here's yesterday's low right here. Low of day, 1907.50. This profile is nowhere near finished to the upside. I'm going to start looking for what? Start looking initially for VPOC from yesterday, which was the most fair price. So my first target on that trade at 1910.50 there, 1910.75, is going to be right in front of VPOC. So I'm going to look for an exit of 1450. Now, if for any reason something happens and price starts coming back through 1910.75, I can simply get out of the trade. But I'm looking for price to come and test yesterday's VPOC now. And again, the reason is because yesterday, this is the most fair price. Question about my settings on OFA on the ES 12.4 and 12.6. 12.6 on the previous chart, just simply because it takes up less bars, and I'm so yes, on the 12.6 chart, I care about the volume profile, so I care about getting a lot of bars in, and I'm sorry, fewer bars, so I'll have fewer bars with the 12.6 chart. The 12.4, 12.4, same thing. It gives me pretty good sense of the volume profile. So when I care about volume profile, I have a bid, sorry, not bid, probe and rotation setting that typically is higher. My probe is going to be higher. When I care about my print and what I use to execute at a moment of truth or a point I'm interested in trading, I use a 6.4 chart, because this gives me a really good feel for the road, so to speak. So what's happened here is it doesn't look finished to the upside. but this looks like it may be cooling off a little bit. And if I were in this trade back down here at say 11, what I would be looking for, because of this, we'll get into this Thursday and Friday. This lot of strength at the offer up here. I don't think buyers are done up there, but this combination 81, 569, and a couple of ticks below this high tells me that we're likely to start to get some rotation lower. So I'd have to start making some decisions about this trade, and what this print would likely cause me to do is start taking some profit. So remember, what I said is objectivity is so crucial to the psychology and staying consistent in trading. So what happened here is I got the trade that I wanted, right here, went long, and prior to right here, and prior to my target, yesterday's VPOC, it was still showing strength. The profile was showing unfinished. Everything was looking good. And then I get this bar on the 6-4 that says, wait a minute, we may have some issues. It's not to say that this target is still not valid, but what the print is saying is something is changing a little bit. We're getting a little bit more seller aggression. I still have this as my target up here, but this starts adding some risk because it could come all the way back down to this low volume area, and I have to make a decision as to whether or not I want to hold for profit or I want to take a little bit off, because I can always get back in. If the print comes back down and shows weakness again at the bid, I can always get back in or add more contracts. All right, so there we go. So I use my 6-4 chart, my moment of truth chart, and to actually manage my trade is right there. So I was looking for a tag of yesterday's VPOC because it's the most fair price, and that's where I expect price to go, and at least test, and look what we got. Right up to 15. Now, if you look at the overnight session, you can see a high up here of 18.25. And if you look at yesterday's activity, we've got this low volume area between, say, 1750 up through 1920. One of two things are going to happen in this area. We're either going to get a little bit of a battle in here, and if we start getting a battle and start getting another distribution higher, that's not always a bad thing because we're getting acceptance higher. If we start getting price with momentum dots into this distribution from yesterday, this is kind of what's called a double distribution day. If we start getting price beyond 21, then we're into this distribution. And if today's profile leaves a low volume area somewhere right in here between 17, 18, 18.25, I would look for a long off of that low volume area, and actually all the way up to 20, and look for price if it starts breaking 21, 25 to actually start clearing this whole area. Does that make sense? My stop for that trade that was at this low volume area, 1075, my stop would have been likely to no more than 3 ticks on that trade. Because if it breaks through there, I want to give it some room, but at the same time, there's still potential for it to come back down and test to the downside.